effective immediately, all national security tariffs under Section 232 and existing Section 301 tariffs, they're existing, they're there, remain in place, fully in place, and in full force and effect. Today, I will sign an order to impose a 10% global tariff under Section 122, over and above our normal tariffs already being charged. And we're also initiating several Section 301 and other investigations to protect our country from unfair trading practices of other countries and companies. Nothing changes. They'll be paying tariffs, and we will not be paying tariffs. Our deal with India is they pay tariffs. This is a reversal from what it used to be, as you know. India, and I think Prime Minister Modi is a great gentleman, a great man, actually, but he was much smarter than the people that he was against in terms of the United States. He was ripping us off in India. So we made a deal with India, and it's a fair deal now, and we are not paying tariffs to them, and they are paying tariffs. We did a little flip.
We did a little flip. Well, that's one way to describe it. A flip, flop, and a flip again. What a Saturday and a Friday evening this is turning out to be. Welcome to this special show on NDTV Profit, where Neeraj and I are going to attempt to decode what really happens after all of the events of the last 24 hours and less, actually 12 hours odd. Neeraj, we didn't know when it could happen, but it was always a possibility that the Supreme Court just could come in and say that this law that you've used from the 1970s, IEEPA, is not something that you can utilize in this way. So this was known.
This was known. Okay, before I give, I would look at it from the lens of the market's perspective. What do you make of all that's happened in the last, let's say, 12 or plus hours. 2, 14 odd hours.
14 odd hours. Okay, so here is my take, and I will start with that. The Supreme Court deeming tariffs unlawful is a huge political blow as well. It's not just a blow to what Trump is doing in terms of governance, it's a huge political blow as well. Trump has imposed fresh 10% tariffs almost immediately and says that he will impose others under various other sections that he will now look at. But the fact is that the sting has been taken out of the tariff weapon, this tariff stick, which was used generously against all other nations. The sting has been taken off. I'll just go back to one line from the Supreme Court. After all, the United States is not at war with every other nation in the world. So that sting goes out. Trump says tariffs with India remains, but remember there's an Indian team in Washington who has to ink that entire deal, and they just got more teeth. So this will be one space to watch in my view. Now, analysts estimate there'll be a 2.5% downward revision on Trump's tariffs effectively. This is what BOFA is saying, including what he has announced. So it could be in the range of 8.5. We will have to wait and see where our rate settles. Is it from 18 to 10 effectively? Are they going to stick to 18 because that's what we negotiated? I think that's a bit up in the air. Another big question to my mind, what happens to the $175 billion that the US has collected in tariffs? Do they have to refund it? And he says that'll be in court for maybe the next 5 years.
Yeah, but by that time he'll be long gone. So I think that's maybe not his headache. Even if it is, he's going to push it on to the next administration, I would reckon. I kind of almost agree with everything that Tamanna said. From a lens of how the equity markets or risk assets take it, I think tariff uncertainty going away is a plus. All things considered, it is a plus because any form of, markets are a slave to earnings and certainty. Any form of uncertainty going away, I would reckon that the markets will take it well. At the margin, India's relative beneficial rates also go away. Now, the jury's out there. It's split right down the middle, you would argue. Some people believe back to usual is great. Some people believe India had 18, some of the other competing nations maybe had slightly higher, China at 33. Does this actually, with everybody coming back to 10%, is that a net negative? I would suspect not, but the jury is out there. This is debatable, and I think we'll talk about this during the course of the show. Markets are very likely to cheer the verdict on Monday morning, and I think in some sense what we saw yesterday was a brief indication. It's not a big bang 4% up move that is out there, but we'll probably likely to see some cheer on Monday. And frankly, now, if you think of it, now that the earnings tariff uncertainty is back out, earnings growth as well as macros will now take center stage, and you would suspect that this is how it is going to be. People will now start following earnings because people will believe in all earnestness that at least that one uncertainty which could impact valuations is out.
I have a slightly contrarian view.
On
On the last part, if I may, that the uncertainty is out. I think the uncertainty is back with a bang. The uncertainty was out when you knew you were at 18. Now you just don't know what's going to happen. We have not signed that 18% tariff deal yet.
But he's just said, right, that we are going to 10% for all nations.
He has said we are going to stick with our deal with India. He has imposed 10% under one particular section. He has 4 other sections to impose more tariffs on, which will be specific to sectors. So some will impact steel, etc. Some will impact others. Some will be retaliatory tariffs in the sense if he can prove that these are unfair practices, then they come in. I think one whole Pandora's box has opened up versus before, where it was clean and straight.
Okay, here's my question then, just before we get our guests, right? What happened immediately after 26 Jan and India and the US signing this favorable agreement? Seems that both countries are on the right side of each other. If anything, this is a Supreme Court decision, not something incited by India per se. One would suspect that what Trump will do will not be net negative to India versus some of the other countries.
That I agree with.
So therefore the uncertainty out of the window.
No, will not be net negative to India. That uncertainty of how he would change his mind was there a day after the deal was announced. And you saw that in the markets as well. So the sentiment to India is positive, has always been there, but it's not always played out in his actions. My only worry is that you will now have a lot of this back and forth. What happens to the refunds that the US has to give? If they have to give refunds, they have to give them to the Indian nation as well. So all of those questions come in. And in fact, let's take that discussion forward. David Roche, strategist at Quantum Strategy, with us this morning. Ashok Sajjanhar, former ambassador, joining in. Ajay Sahai, Director General and CEO of FIO, joining in, as is Jaya Anand Dehadra, a lawyer at the Supreme Court. Welcome to all of you, and thank you for speaking with us. David, I'm going to take this question to you first, and we've been trying to sort of wrap our heads around all the information that has come in and figure it out. First of all, do you think it's 10% for India, or will we end up sticking to the 18% from an Indian perspective? And what else could we see? Because Trump has acted with speed to impose these 10% tariffs, almost thumbing his nose at what the Supreme Court is saying, that if you're going to make my tariffs illegal, here, take another set.
Well, there's a lot in that, but I've got to say that I really don't know why you have me on the program, because I totally agree with everything you said in the beginning. You're a lot better at this than I am, so maybe I should just
No, David, come on.
Exit straight away. But look, I say this, there are a couple of good things. One is that actually US inflation will be lower if these tariffs, i.e. P8 tariffs, are dropped. You could get 0.6% off US inflation. If they're replaced by something else, that goes out of the window. The second thing I would say, which is pretty good, is the rule of law has been clearly signaled that it's alive and well in the United States, which was becoming an increasing doubt in the drift towards autocracy by Trump. That's a good thing. And the third thing, which is probably a good thing, is that at least now we're not waiting for this ruling forever. But the ruling was widely anticipated. So what's good about it being widely anticipated? It's widely anticipated is good because it means that essentially the market got what it was more or less expecting, so it's unlikely to crash. Okay, that's the end of the good things. Now I'll tell you what is bad. I think you've opened up a total Pandora's box where this increasingly irrational president, and I would remind you the dying fish flap hardest, is going to try and scramble back using other powers to get the same amount of tariffs back. Now, actually, even if he uses Section 122 of the 1974 Act, this requires him to demonstrate that the US current account or trade account deficit is endangering financial flows in the dollar. So I'll tell you one thing's going to happen. When he tries to put on these new 10% tariffs, they're going to be challenged in the courts straight away. So that's not clarity, that's uncertainty. And I can go right down the line to all the other things he said he's going to do. It's all the fog of war, trade war, and you're not going to get away from it. The last thing I'll say, and then I really will shut up because there are a lot of people who are a lot better than me on this here. You've just lost 170 to 100, to call it 200 billion at a run rate of US fiscal revenues coming from tariffs. Okay, that's 0.6 or 0.7% of GDP. It has to be compared to the already astronomical $1.7, $1.8 trillion budget deficit, and it's going to get worse. So what's going to happen? Yields are going to go up. If yields go up, the economy comes down, and you're going to get more silly talk out of the Besant and other people at the Treasury and out of Trump that they need to do a deal with the Fed to bring down long-term rates, i.e. do away with Fed independence. So I'm sorry to say that if you think this is the end of the nightmare and the beginning of the sweet dreams on the cuddly flower-bedecked pillow, I don't think so.
Ambassador Sajjanar, you heard David Roche and talk about everything that he said. What is your own sense? It seems that every country is at 10%. And despite the Supreme Court verdict, Donald Trump has said this. So therefore, the belief is that it is now at 10% and not that he can't put tariffs. What's your sense of how this plays out?
Yeah, thank you very much, Neeraj. Thank you, Tamanna, for having me. Let me say I would tend to agree everything that, your previous speaker has said. It doesn't do away with uncertainty. In fact, it magnifies uncertainty because, there are a number of scenarios that you're coming to. Number one, is it 10%? Does it stay at 18%? Is it 18% plus 10%? There are very many uncertainties that, are going to plague the market. As far as Mr. Trump's own announcements, we have seen that, this blunt weapon has been taken away from him. The blunt weapon with which he could badger all the countries, there was no difference. Someone gets 18%, someone gets 25%, but it's across the board. It is an omnibus sort of an instrument that has been taken away from him. But he can still sort of, his powers have been severely limited. It's not only the political clout and the political influence of Trump that has been eroded, but his powers to inflict that damage on the tariff on trade structures, that has been brought down, but the uncertainty has not been brought down because he can put this 10% and that lasts only for 150 days. After that, again, he has to do something. He is the sort of language that he used, terming the Supreme Court judges as lapdogs and fools and all. This is not language that any, not to say head of state or government uses, but not even, normal individuals use in their normal one-to-one conversation. So he is like a wounded animal. And he thinks that, great harm has been done to his prestige. So he's not going to stop at anything. The last point on India, as far as India is concerned, there might be all these good statements that are being made that, Mr. Modi is a great man and I have great respect for India. But he does not walk the talk. We have seen that right from the beginning. If India is such a great friend of the United States, why did he have to impose 50% tariff? Why did he have to impose 25% tariff? Because we are buying Russian oil. There are other countries which are buying much more Russian oil. They are doing much more trade with Russia. They have not been touched. In fact, the United States itself has been buying things, nuclear material, fertilizers, etc., from Russia.
Sure.
There is no letdown on that. Last point, even Putin told him in Alaska that since Trump has come, the trade between Russia and the United States has increased. So, I don't think that his statements about India are translating into action, and that will, continue to create problem. Last thing on India, I think we should not be, as over the last 1 year plus, we should not be either over enthusiastic in welcoming this or in pushing back at. Let's see what happens.
We have
Let's
been
see how
doing
the
that.
guys.
That I think we have been doing. We have been very, very middle of the road and careful with our diplomatic responses. I mean, it's been a masterclass at how we've traversed all of this uncertainty. But for practitioners, and I'm coming to you, Mr. Ajay Sahai, because at the end of the day, it's you at the front line. In that sense, you know, it's the traders, it's the exporters, the importers who are at the front line who have to figure this out. What is your understanding of where the tariff rate sits? I'm sure there have been conversations with clients overseas as well overnight. What has been the understanding so far?
In fact, if you look into the Supreme Court decision, what we are sure that reciprocal tariff goes away. So 25% tariff on India no longer exists. The tariff imposed under Section 232 on steel, aluminum, automobile, and auto component, that continues. There is a provision for the refund of the tariff collected. That will come into place. When it will come into place, we have to see that. And now he has imposed 10% tariff across the country. But I will say that this is simply accentuating the uncertainty. There are enough statutes power with the US president which he can invoke. I'm pretty sure that in the long run, it will be definitely invalidated, but it will definitely add to the uncertainty. So we are not clear in what way it will span out. As of now, we are looking into a zero reciprocal tariff and 10% tariff across the country. So we are even out in competition unless he invokes some other statutes to impose specific power on the countries.
Okay, Jay Anand Dehadri, lawyer at Supreme Court with us as well. And Jay, yes, Indian rulings, US rulings would be different, but you would understand legalities better than most. What's your sense of this and the subsequent move to tariff all nations at 10%? And how do you think this plays out?
Hi, Neeraj, Tamanna. You know, you have some very fine economists on your panel, so I will restrict myself to my understanding of how the legal system in the US is playing out at the moment. And the way I see it is that this is an extremely, extremely significant development. It signals that Trump's political power, as David rightly pointed out, is now greatly diminished. Now, this is a 6-3 ruling against these tariffs, invoked, of course, under the International Emergency Powers Act, which is what Donald Trump had used to bring in these tariffs. And what the US Supreme Court has said is very significant. They've said that trade deficit or trade policy is not the same as an emergency situation such as war, etc., which is what is actually contemplated under that law. So from that perspective, this is extremely significant. That is one part of it. Second, it was also rightly pointed out that there are some other statutes that are available to the US president to invoke and to bring in other tariffs. And I believe another speaker rightly said that, you know, a dying fish flaps hardest, or an idiom to that effect. And I think that is exactly what is happening. But I do not for a moment believe that any of these additional tariffs that Donald Trump will bring in will, in fact, survive, you know, the legal test when the time comes for that. So all in all, I think it will be a massive bonanza for Indian exporters. And I think the Indian markets will open with a bang on Monday. This is what I see. Insofar as refunds, Tamanna, you had pointed out something very interesting on that aspect. Now, tariffs are essentially, as we all know, essentially taxes that are imposed on that the US government was imposing, right, on their importers. So from that perspective, I think a lot of these US corporations will now start filing lawsuits for refunds. So that will have a trickle-down effect in terms of how pricing is determined going forward, you know, even with regard to Indian exporters. So net, I think this is going to be fantastic for India.
So just Jay, from your legal lens, to understand that going back to the Supreme Court is a very dim option, right, for the Trump administration?
Oh, absolutely. Not only that, now that the US Supreme Court has laid down this decision, you will have the circuit courts, all of the, you know, the federal, just as we have the high courts in India, which are jurisdictionally restricted to their various states, you have circuit courts. So these circuit courts will now follow the precedent that has been laid down by the US Supreme Court, and they will get enormous confidence in perhaps striking down similar tariffs as and when these lawsuits are brought to them. So filing a review, they don't have a similar system as we do in India, that you can, at the drop of a hat, go and file a review or ask for a larger bench to be constituted. None of those options are available to them. So insofar as these tariffs imposed under the 1974 law, which was, you know, this IEEPA, insofar as that is concerned, that goes. And there is another very significant thing. Jimmy Carter, the US president, it was during his tenure that Congress had brought in this law essentially to curtail presidential powers. This is post-Watergate, right? This is when Nixon had essentially, had shown that US presidential powers could be vastly misused. So this is the background to it. So now you have the US Supreme Court essentially, throwing the book at Donald Trump and saying that you need to take Congress along. You can't act like this dictator. I mean, pardon my use of the word, but essentially that is a signal that is coming from the US Supreme Court that you need to take Congress along with you. You can't unilaterally exercise your executive powers as and when you deem appropriate.
Okay, David Roche, in short though, global markets per se have cheered this. Would you reckon risk assets will take this well, including Indian markets?
Not really. Look, I've heard some very wise comments from the panel, including the inability of other tariff powers to replace what Trump has just lost with the striking down of IEPA, which has just been talked about. And I think legally that is extremely significant. The second thing I've heard, which is really important, I think, is that this is a major blow to Trump's powers overseas as well as domestically. Domestically, he is now going to be put in line by the Congress, hopefully. Overseas, I think people are going to say, well, he doesn't have the powers of coercion anymore. If we don't go along with him on, say, security or whether he likes the Supreme Court head or this or that thing, he can do nothing about it because he no longer has the tariff powers to hurt us. So that I think are two very important things coming out of this conversation. But I would say one other thing about why I don't think markets will rejoice. I don't think markets will rejoice because the level of uncertainty has not gone down, it's gone up. And because fundamentally, the US economy comes out of this weakened by the loss of a significant part of Trump's funding of his future plans of mammoth military spending and his future plans to issue $2,000 checks to qualified adults in the US economy, etc. All of these plans go by the way because he just lost what he said he was going to be able to use to fund his ambitious spending plans. So I think we look at a real problem in the US Treasury market. And I don't think the US financial markets can do particularly well as long as that problem is not resolved, which I don't think it will be resolved for many, many months. And the result of that is, as I don't believe in diversification, if the US is not going to welcome this with a bang and a hoop and a UP, then I don't think world markets are going to. Because frankly, world markets are going to operate like little cogs rubbing against the big cog of the US markets. So I'm sorry to be the Grinch that spoils the party, but that's my view.
No, but if in any incremental improvement is actually something that Indian markets will probably cheer. I'm going to take a quick market take from Parag Thakkar, head fund manager of Fort Capital. He's joining us on the phone line. Parag bhai, what we are seeing with the GIFT Nifty right now is showing a very strong start for India on Monday morning, and that's essentially basis the idea that you're going from 18 to 10, isn't it?
Correct. Good morning, and thanks for having me on the show. So I would like to say that yes, the tariffs have come down, and I would not close down the case that saying that the tariffs have come down to say 10% or whatever. I think the Trump administration will do something or the other. That's a worst case scenario. That again it goes back to 18%, but that is final, right? That we are at 18% then. In worst case scenario, which was already factored in by many companies and their customers in US also. So I would say that the tariff impacted sectors like textiles or stationery exports or shrimp exports or footwear exports or capital goods exports, for example. Now those guys definitely should do well. The only key monitorable in my view for overall health of the market is US 10-year bond yield. If that behaves well, even after this thing, because now that there is uncertainty that they'll have to repay back to the countries from which they have collected tariffs. If there is something like that, and that puts US 10-year spikes, say 4.09 it was yesterday night, say it starts spiking, then there is a problem for the global markets. So that is a key monitorable for me from overall market perspective. But the tariff-sensitive sectors, I think, should rejoice on Monday for sure.
Tariff-sensitive sectors should rejoice on Monday. Parag bhai, thank you so much for that quick take, and we're going to get you a flurry of market voices in this special show as well. But I have Ajay Sahai with me, and I just want to understand if that is what he is echoing as well. Is this the sentiment that's echoing? Worst case, you go back to 18. You're at 10 right now, and then they add XYZ section and take it back to 18. But that's still the worst case. That's the ceiling that we're now learning to live with, isn't it?
In fact, in our understanding, we are at 25%. 18% will come down once we go for the FTA, but now 25% is now 10%, and we are even out. So from that perspective, we are better placed, but we are equally concerned that he may use other statutes to invoke further duties, particularly on the countries who are engaged in the tariff talk, so that he has a better negotiating posture for that. So that's our cause of concern. Of course, so far as the refunds are concerned, not many Indian exporters are eligible for that, because unless they have gone for the DDP payment where they have paid the duty, they will be eligible. But many of them have some kind of tacit or formal understanding with the US importer that if the duties come down, they will be sharing the benefit, and probably they will be getting benefit out of that. But as the situation stands, still a lot of things are not clear. We have to see when the executive order is issued for withdrawal of the tariff, imposition of the new tariff. On the new tariff of 10%, he has given exemption from agriculture and some of the sectors. Some of the countries have been exempted, particularly Canada and Mexico. So we have to evaluate the incidence of taxes on these countries vis-a-vis on India.
Okay, I have a question for Jay as well, but just before we do that, I want to first head across to my colleague Sharad, who is standing by to take us to the list of businesses or stocks that have exposure to the US. Sharad, take it away.
So we are seeing a lot of changes happening in the tariff story. Of course, remember, for India, 18% tariffs has been announced. And after that, there is a change happening, and from Supreme Court, of course, they have written it off. But how much changes do happen? I'll just give a revision for it because of the major exposure of Indian stocks and sectors to US. The textiles and apparel segment is one of the most important and volatile counters. These look at the stocks, Indocount, Kitex, all of them are having more than 60% revenue exposure. Other group of textile stocks are also there, which should be in your focus, which includes a larger player like a Trident also. These exposures are there, but slightly less, almost around 30-odd%. And the smaller names includes KPR Mills, SP Apparels as well in the mid-cap and the small-cap space. Apart from the textile industry, also let's look at the seafood companies, and Avanti Feeds and Apex Frozen. They are having a significant exposure coming in from US as well, and water-based also roughly 40% of their revenues are coming from here. Seafood and then auto ancillaries. This is another third major sector for exports going to US. Likely Sona BLW, a lot of volatility we have seen, and already a good run-up was there, slight correction was there. So you can expect volatility in these counters, maybe on a positive surprise on Monday. Let's look at the other sectors also which would be in focus, and that is the chemical companies, especially with the organic chemicals, the way the benefits were coming in. SRF is there, Jubilant Ingrevia is there, and it augurs well for these companies going ahead as well. Apart from that, even PI Industries and Atul make it to the list, apart from Aarti Industries. Apart from chemical names, there are other names also in chemicals we should be tracking, where if the tariffs come down, it will be beneficial for them, and of course the supply chain system story is also there. Apart from the chemical names, let's talk about the consumer companies, and this is also very much important, especially the basmati rice trade and some kind of FMCG products. That is where we are seeing a significant revenue exposure coming in. So these are the stocks or the sectors which are having a significant important exposure coming in from India to US.
Okay, that's a good summation. Thanks for that, Sharad. Now, like I said, I just wanted to take a question with Jay Anand. And Jay, the other question would be that there is fair degree of chatter with sources telling us as well in some fashion that even the reciprocal tariffs of 25% come off to 10%. To your understanding, because you understand legality so well, would all existing tariffs of every nature, based on what the Trump comment was post the Supreme Court verdict, come off to 10%, or is there a doubt there?
Yes and no. So the US Supreme Court judgment says that broad-based tariffs, which have been imposed in terms of the emergency law, they are illegal now. So that is very clear. But insofar as another section, Section 232, which is another law entirely, by the way, that law makes it clear that in some sectors, as it was also pointed out right now, like steel, aluminum, autos, some some tariffs in those sectors can still remain. So, all in all, yes, there will be some uncertainty in terms of which tariffs can remain, and also in terms of what power Donald Trump retains now to bring in new tariffs. But insofar as his ability to wield tariffs as a threat, as a threatening, as a device to threaten nations that he's negotiating with is concerned, I think that stands severely diminished. So, insofar as that is concerned, it sends out a message, according to me, to markets and trading partners around the world that here is a president who earlier had a very unorthodox, let's call it that, unorthodox style of negotiating, and now stands severely diminished by his own law keepers. I mean, the U.S. Supreme Court has essentially said that Congress sits on top of him as a check, and as a check on his powers. So he, according to me, his negotiating power stands severely diminished, and even the ability to impose fresh tariffs now is restricted to other narrower statutes, if I can call it that. These broad-based tariffs now, in terms of what he has been using with the international emergency law, goes out of the window.
No, fair point, Jay, and I'll come back to you on what happens with that refund mechanism as well in a bit of more detail. But one thing we've seen from the Trump administration is that they're very good at finding those levers of power where earlier presidents, meanwhile, did not manage to. Vaibhav Sanghvi joining in, co-CEO at Avendus Capital, Alternate Strategies. Vaibhav, very good morning to you. And, we're trying to get a mix of views on the show so that we can also understand how this will pan out. What is your sense of how markets will look at this right now? The data that we're seeing shows perhaps a positive start in the morning, but will that uncertainty start creeping in?
No, I mean, I completely agree with what has been happened in terms of the tariffs and probably the impact on the markets, at least in the morning tomorrow. Now, while this is a big event and we get reduced to the 10% kind of bracket, but my take would be that as kind of time goes by, people will start evaluating from a relative context rather than an absolute tariff coming to 10%. What do I mean by that is basically that, India, when it was at 18% tariff, was far more competitive as compared to the other emerging markets or probably China as well. Now, if everybody is coming to 10%, and that is something we will probably watch for in terms of the clarity, then how, from a relative context, India becomes, competitive in that sense. So, a lot of moving parts. I think it will take some time before fresh clarity kind of emerges, and then probably market will take into account. Only submission is that on euphoria, I would not probably want to get too excited from a market standpoint. Let more clarity come, and then we'll probably analyze it as well.
So this is a very important point. I just want to double click on it, Vaibhav, that at 18, you were at least better than those who are 19 and 20. If everyone is 10, then you kind of lose that advantage. Is that something that we have not yet seen playing out?
Absolutely. And not only that, I think more importantly, what will also be seen is that if you see in the last 6 to 9 months, our currency actually has depreciated by about 5-6%, whereas China currency has kind of appreciated. So yes, we do have an edge from a currency standpoint, but from a tariff standpoint, I think virtually every other emerging market who has been an exporter to US comes at parity. So yes, we might have lost some edge on that, but I think we are still better off in terms of the currency. And as I mentioned, I think the US will then have to take a view in terms of if they are strategically placing some countries ahead from their own relationship perspective, then probably it would be a positive incentive which they will probably give at a later stage rather than a tariff which was a negative connotation. So I think we will have to wait and see how it kind of pans out.
Trump tariffs are toppled and then imposed at a lower level. So what does that mean for India? Well, what government sources are telling us at NDTV Profit is that now, after this White House notification, tariffs on Indian goods will be at 10%. And this, if you look at what the US White House website has also said and what the US Embassy in India has also said, it's very clear that at least for the next 150 days, you're looking at a 10% tariff whenever it comes in. Now, did we go from 18 to 10? Did we go, as Ajay Sahai said, from 25 to 10? Becomes really the question. In any sense, is 10 better than 18? And the reason I say this is because at 18, at least you were cheaper than other countries who would compete with you for exports in the region. At 10, you're all on the same level playing field. There is so much to unpack in what should look like a cut and dry win for India and any nation who is on the receiving end of tariffs. That's what we're trying to unpack right here this morning. But David Roche, I want to come to you with a point of what we saw with the US GDP data, and we'll just pull that out for you. The first cut of data that came in yesterday was also displaying some weakness. Could a case be made that we need the tariffs? We need the tariffs, and we as a nation can't give back $175 billion because it might just come to that.
Well, I mean, they're kind of two separate things. The GDP figures, I really think are kind of maverick. I think the US GDP, right, increased less than market expectations, but it doesn't as yet point to any sort of economic downturn or recession, according to me. The tariffs, I mean, the tariffs per se, just take tariffs. They don't increase GDP growth in the United States or any other country that imposes them, particularly if the tariffs are 100%, which is the evidence says so, paid by US consumers. So what you're really asking me is, if you take away those tariffs or you reduce them from, say, let's say, an average rate of around 15% to, say, 9% in the case of the US, will that actually increase the growth rate in the United States? Well, it could, because there are two elements to it. The first thing is it'll cut the inflation rate. If you decrease the tariffs, so the tariffs are being paid by US consumers, then you would probably cut about 0.6%, maybe a little less, but a significant amount of the PCE inflation rate. And that, of course, has implications for the Fed policy and everything else. So in that sense, it could boost growth. The second way it can actually boost growth is, of course, to decrease the cost of US industry investing, because so much of these goods that it invests come from abroad. But against that, you have to weigh the fact that you're going to lose that tariff revenue as a source of funds. So the budget deficit will increase by 180, 200 billion US dollars from 1.7 trillion. That is not huge, but it's nevertheless 0.6, 0.7% of GDP in a world in which markets are increasingly worried by the sustainability of sovereign debt. So you have to weigh those things. Two things kind of would say, if the tariffs come down, well, actually, contrary to Trump's blah, blah and propaganda, it would improve US growth and decrease inflation. And the last point is, if the tariffs come off, then you don't have that money, and you're going to have to borrow more money, and the cost of borrowing that more money will go up, which is bad for the economy. On balance, I would say, in general, it would be a positive for the US economy. But, you know, there are a lot of slips between cup and lip on that one, and we'll have to see what Trump does, which can do further damage.
Okay. Ajay Sahai, a question to you. I mean, and we asked Jay Anand as well about the legalities, but now about the export competitiveness. An average Indian exporter might have been thinking that 18% on me versus 34% on China, which means there is the theory of relativity working, and that might help my export competitiveness in some fashion. Add to that the rupee, what it is doing. If everything is at 10%, does it reduce that attractiveness by a wee bit, or do you reckon clients or customers may not be looking at at that kind of differential?
I think the market and exporter importers both are looking for certainty. So if 10% becomes a certainty for all the countries, we will be very, very happy with that. Please bear in mind that the additional tariff or reciprocal tariff of more than 10% was applicable to less than 60 countries out of 200 countries in the world. Though, of course, some of our competitors in South Asia and Southeast Asia were worse off than India. But I personally feel when exporters are looking into increasing exports or investing to create the capacity, they want a certainty. So if no further tariff is imposed or Section 301 or Section 201 is not invoked, I personally feel that exporters will be feeling much happy with the 10% tariff.
Okay, quick word from Jay. The comment that Trump made on refunds, the $175 billion refunds, I thought that was very telling when he said this will be tied up in disputes for 5 years. And as much as, you know, we dissect what Trump says, one line did make sense when he said that in this entire order that the Supreme Court took so much time to look at, they didn't put even one line on what to do with the refunds and have left that question open. I mean, I wonder why. Maybe it was not in the remit. Do you think that's going to get a bit sticky?
You're absolutely right. It wasn't within the remit of the court to look into that aspect of refunds, Tamanna. But insofar as that is concerned, I think, you know, US importers have paid these duties. So it is US importers who will be eligible to get these refunds. But what Trump has forgotten to mention, and, you know, he's been a very regular consumer of US justice, as we all know, personally and in his businesses, is that US importers will immediately move for these refunds and may also claim damages from the United States for doing this illegal act and for whatever losses they may have suffered. So this is going to snowball, according to me, into a much larger problem for the US president, and in terms of, you know, the wisdom and legitimacy of what he has done in terms of these tariffs. It's going to cost him a lot, his presidency a lot. So to my mind, this is absolutely clear. And also on the thing of 5 years, I don't agree. The US, you know, the beauty of the US justice system is that is speed. And not all cases go to trial, Tamanna, as we all know. It's a very small fraction of cases that actually go to trial. And a lot of these cases are in fact settled even before trial begins. So on the contrary, I think these cases will get wrapped up very quickly. Perhaps he meant to say that after his 3-year tenure, I mean, he gives up the presidency in 3 years, it'll be a problem for the next administration to deal with. I don't think it will be that at all. I think these settlements and judgments will come rather quickly.
Okay. Manish Sonthalia, Director and Chief Investment Officer at MK Investment Managers, with us on the show as well. And gentlemen, everybody else who's been with us on the show, it's been a delight talking to you. And let's welcome in Manish on the show with his thoughts as well. Manish, how do you think about the market impact of this? Because some would argue that uncertainty goes up. Some would argue that no, now we are at 10% and we know that any future tariff action will not be unilateral by Donald Trump. And both arguments could be correct because both of them are a hypothesis at this current point of time. Where are you at?
So sentimentally, the markets looks like being very, very oversold. And from that point of view, there's going to be a knee-jerk reaction definitely on the upside. So whatever de-rating was happening in India is likely to be coming to an end. That is one. Secondly, India's export competitiveness just does not, get diluted or get increased with the duties coming down from 18% to 10%. India has to compete in the global markets. If everybody is in the same boat at 10%, then India will have to compete with other countries at 10%. So I don't think, except for the sentimental part of the entire journey out here, things are going to be that much more forthcoming in terms of exports for India. That's one. But I think emerging markets are likely to do much better, given that the US dollar is likely to be under pressure if this thing has come about. So from that point of view, emerging markets in India would also stand to gain.
Okay. Manish, do you think that if we see a gap up on Monday, it will be short-lived and sold into? How are you looking at Monday morning right now?
No, Tamanna. So, see, earnings are the ultimate truth, and the last quarter numbers are pretty much satisfying. NSE 500 around 12-13% sort of an earnings growth. The broader market, which has seen the bulk of the pain, is reporting 29-30% sort of a earnings growth. So from that point of view, the fundamentals are in place. The FIs have been selling all along, and sentiments have been very poor. So this thing helps at the margin in terms of being slightly more bullish than what you were last week. And given that the markets are tremendously oversold, you see the rally sustaining is what I feel.
Okay. I believe Devin Choksi is with us as well of DR Choksi FinServ. Devin Bhai, Manish Sonthalia believes that now that the tariff quote-unquote uncertainty is out of the way, back to macros, back to earnings, back to certainty, markets will not just cheer on Monday, but likely could continue. Do you believe the same, or do you believe it will be short-lived?
Hi, Neeraj. Well, I think the most important part is that Trump has already said that he is going to look into the other authorities to, restore back those tariffs. And this 10%, is going to be only a temporary. So if should it continue the temporary, then probably the market will have a cheer on one day and the disappointment on the other. So in my viewpoint, it is still not very clear as to which way one will swing. But I do agree on one aspect that ultimately the corporate fundamental prevails and India's competitiveness prevails. Today, if we look at annualized export of India to around 50 to 60 or 60 to 70 billion US dollars, I guess even if the 7-8% saving that you are talking about could be a meaningful good sum of money, which we are asking for around $7-8 billion kind of money, which we are saving, in a significant manner. So in my viewpoint, that is a plus point, at least from this news at this point of time. Many companies would definitely, feel relatively relieved as far as their competitiveness is concerned. But at the same time, the rest of the world also basically got the same level of tariffs. So some businesses like textile, particularly the common textile apparels, they may not be as favorably seen. But the other part of the textiles, could possibly mean that it will have relatively better. So we'll have to see how exactly it pans out. But uncertain times are probably getting over for the main issue, that is higher amount of currency inflow in India could take place because the depreciation of rupee, that threat is probably receding now. And at the same time, my take is that if the US corporates start spending money, then Indian IT exports and among other things could possibly start returning back to favor. So that is a larger theme that I want to follow. Maybe these tariff adjustments could possibly, as I said, disappoint on the other day if it has cheered up today.
Positive IT right now after everything that's happened in the last couple of weeks. So on one end, the AI threat they win, and on the other, now the tariffs getting lowered, if nothing else.
Yes, I would distinctly remain positive about IT, and I guess the AI is a big enabler for us at this point of time in the area of building new platforms, new applications, new products for global majors. So I would remain distinctly positive about the possibilities and the opportunities that we are sitting on.
Fantastic. Thank you so much, Devin Choksi, for speaking with us. Now, the question is, what could happen next? And we saw Donald Trump, the US president, act very quickly on one set of tariffs to replace the ones that he can no longer oppose. So Section 232, for example, was used, and that is a Trade Expansion Act of 1962. It permits tariffs for national security threat. You also have Section 201, that's a 1974 law that allows tariffs if imports hurt US businesses. Then there's a Section 301 as well. That's the Trade Act of 1974. It permits tariffs on nations targeting the US and permits tariffs on nations violating trade pacts. Section 122 is the other one. It allows tariffs without federal review. This is the tool that has currently been used to impose the 10%. There's Section 338, which is the Smoot-Hawley Tariff Act of 1930. It permits tariffs for unfair trade practices. So there is a whole bevy of tariffs that can still be imposed. There'll be specific ones. My only question is whether Trump would want to go back and impose these, especially with nations that they already have trade deals with. We're going to get a quick last word from our guests who have been with us through this special show. Ajay, say hi, I'm coming to you. You've heard all of the views, permutations, combinations of what could happen over the next few days. How are you looking at it?
In fact, I personally feel that he has imposed the additional tariffs so quickly, probably to demonstrate A, that the president still have the power to impose the tariff, and B, so that the refund may also be reduced. Because if you look into when the reciprocal tariff was imposed, the average tariff in US was 16.9%. Now with then 10% across countries, the average tariff has just come down to 15.4%. So basically the refund will be a difference of 16.9 and 15.4 on an average basis. So he has definitely used his wisdom to reduce the refund amount also to a significant extent.
Okay. Since you're doing final words, Jay, to you, one of the beliefs is that administration will almost certainly roll out alternative legal frameworks as well. Is there something that we haven't asked you, Jay, that you want to invoke in this conversation? Quick 1 minute.
I think on the trade aspect, I think you have fabulous speakers who've explained everything to your viewers. But Indian exporters, their power to renegotiate a lot of their contracts, I think, will be affected because in terms of now the refunds that their counterparts in the US, who are importing their goods are concerned. So they will be getting refunds. So I'm guessing it will be more favorable terms. There will be more favorable terms for Indian exporters. That is one aspect. The other takeaway for me majorly is that, look, the United States is a very strong, robust rule of law democracy. And ultimately, this signals that you have the US Supreme Court that has come in on an aspect where the US president thought that he could go beyond the powers that Congress has given to him. And that has now, the answer is crystal clear that he absolutely cannot do so. So I think, this is very interesting from a legal perspective. And I think even from a trade perspective, I think the markets are going to be very bullish about it. From my very limited understanding of the market, I think Indian markets are going to do very well on Monday and Tuesday, according to me.
Okay. On Monday morning for sure. Whether it stays or not is the question. Thank you to all of you for joining us on the show today as we have unpacked all of these various facets. At the end of this 1 hour, Neeraj, are you clearer or more confused about what's going to happen?
No, I think, frankly, by all the reading that we've done to prepare for the show and the views that we've gotten, it seems to be that for now, 10%, some bit of certainty. I know you're on the opposite side, some bit of certainty, and maybe going back to growth and earnings and therefore optimism. Let's see if it lasts.
Yeah, I mean, I like that line from Manish Sonthalia that earnings is the ultimate test, but that was always true. It was the currency depreciation, the global headwinds that were hurting us. Has that ended? The ferocity with which the first strike back has come from the White House tells me that there will be more soon. But we'll wait and see. Exciting times ahead. That's all the time we have. Thank you so much for joining us on this special broadcast. And of course, we'll see you back Monday morning.